And let's get right down to business as we always do. A new short, tell us what it is.
Sure. It's China Internet Nationwide Financial Services, or CIFS. And just in the name, the only thing accurate about that is China. There's nothing internet about it. There's nothing nationwide about it. And from our vantage point, this thing is a complete fraud, a total zero.
You call this, in fact, in the report Muddy Waters is publishing today, a King Zero. What does that mean, Carson?
That means it's another one of these empty boxes from China where whatever real business there is just a teeny tiny fraction of what they actually report. So it's hard to tell whether the percentage of lies here is greater or less than a Sino-Forest or some of these other names, but it's on par with.
On par with, meaning that it's worthless?
Yeah, it's worthless. And because also PS, in addition to its not having nearly the business that it claims, the way that this company is structured, like so many of these China frauds of the past, shareholders don't even own the operating business. And we see that as just a deliberate attempt to further insulate the chairman and the other perpetrators of these frauds from anything that could possibly go wrong. So one thing to understand, and this is probably a bigger point, but when these companies list, when these frauds list, nobody ever gets in trouble for it. They don't have to worry about any jail time. And by setting the company up this way, they don't even have to worry that at some point the shareholders are going to somehow get control over the company or its assets. So it's basically guys sitting in China laughing at the gullibility of U.S. investors. And that's what this company is all about.
I want to come back to the gullibility of U.S. investors and what, if anything, regulatory or self-regulatory bodies should be doing about it in a moment. But before we get there, Carson, walk us through some of your analysis. How did you and your colleagues at Muddy Waters determine that this is worthless, a fraud, a King Zero, in your own words?
Sure. Let's just look at this company and its claims on their face at first. Okay, so this business supposedly was started in 2014, and by 2015, it was clocking in gross margins of 97%, net margins in excess of 70%, and that climbed to above 80% the second year of business in 2016. What do? They make loans, they claim to make loans to small, medium enterprises or arrange loans for small, medium enterprises. Okay, this is not a business that's been lying around waiting to be discovered for a couple of decades in China. And so then when we look, pretty much every disclosure they make that you can try to verify whether their business is real or not, every stone that we can overturn shows that it's a zero. So the purported borrowers that it has disclosed, those companies look like they're sham counterparties, basically controlled by the chairman and his friends, leading us to conclude that these loans never occurred. Other customers, same thing. These are companies that could never get the tens of millions of dollars in financing from a bank they claim to have gotten and appear to be under common control with CIFS. So this looks like a classic China fraud where you have the company and you set up fake customers to basically just create paperwork, but there's no business, there's no money that's being made other than from the IPO.
It's pretty close, in other words, and I don't want to overinterpret here, to a round-trip transaction, almost as if the company were lending money to itself?
Yeah, but they don't have to lend money to themselves. That's the best part. I mean, to pull this off, they literally needed about $1.9 million in the bank at the time that they started the IPO process, because they claimed that what they did was this was such a profitable business and great cash flow. Oh, we decided to dividend out all of these proceeds to ourselves before we began the IPO process, which we saw that with China Media Express, which Deloitte resigned from that in one of the resignation letters for the ages, making clear that thing was a total zero. It's a common excuse for a company that really has no cash, even though it's supposed to have all this cash because it has such a great business.
Carson, how easy was it for Muddy Waters to determine that this company was conducting these fraudulent activities. Where did you find the evidence?
Well, the first thing that we do is we look at these PRC financial statements that are, by law, have to be filed with the State Administration of Industry and Commerce. And we were the first ones to do that back in 2010. And so we were able to use these SAIC financials for about a year and change to show that companies were frauds, because they would report, say, 100 million in rev to the SEC and 2 million in rev onshore to the PRC government. So what companies then started to do was they just forged their SAIC financials, because there isn't really a penalty for doing that. And so for a number of years, it's been pretty hard to look at a US-listed Chinese fraud, pull the SAIC financials and say, aha, smoking gun, there's this huge delta. Well, I don't know what the deal is with CIFS. I mean, we're wondering whether they're lazy or stupid, but for 2016, these guys filed what we think are more or less accurate financial statements in China, and it shows revenue was overstated in the SEC filings by about 5x.
Okay, so it's fairly transparent. If you actually go and get the filings themselves, you can draw your own conclusions. Here's another question for you. I thought that this whole Chinese fraud or fraudulent Chinese companies listed on U.S. exchanges situation had gone away. In fact, it was a couple of years ago that you and I had the conversation about that. And because you said that they'd sort of figured out that people like you and other short sellers were onto them, that circus had packed up and left town. How is it that it's back?
Well, unfortunately, Erik, investors' memories are incredibly short. And what the conduit for most of those frauds previously was the reverse merger, or RTO. Well, thanks to the 2012 Jobs Act, we now have what's called a Reg A+ offering, which is a very light form of IPO. And look, I mean, I think that just calling it Reg A+ shows the corruption and venality of the people who made the decisions about signing this bill into law and then the implementing regulations. I mean, if you were going to put a letter grade on it, it should be F-. But be that as it may, there's now an easy path for these crappy companies to get to market that's only probably marginally harder than it was through reverse mergers. So you've got that combined with, again, investors' short memories, and boom, these guys are able to raise money on the U.S. markets. And as far as I can tell, the money that CIFS raised, that some of the other companies in this class have raised, it's gone. Like, investors are not going to see that money back.
So hang on a second. You're laying the blame effectively at Congress's feet for passing the law in the first place to allow these Reg A+ filings. What about the exchanges themselves? CIFS is listed on NASDAQ. NASDAQ and the New York Stock Exchange have self-regulatory authority and a regulatory burden.
Mm-hmm. So in this report, unfortunately, it's just a footnote, but I'm calling, and this is something that in the next year I'd like to bring more attention to. I am calling for the courts to revoke the immunity from monetary damages that the exchanges have. Okay, I don't want to get into the complexities of U.S. law, but basically, the law has long regarded the agencies as quasi-governmental functionaries, in that they have this regulatory authority that's been partly delegated from Congress to the SEC and the SEC to the exchanges. Okay, the exchanges are now publicly traded companies competing on global markets for more listings, trying to swallow up other exchanges. And when you look at a company like this, when you look at some of the other companies that we've shorted over the years, I mean, look no further than NQ Mobile, which is another total zero, and I think a couple of years ago even got to ring the bell again at one of the exchanges, even though it's pretty widely accepted that thing was a complete zero. So when you look at that, these exchanges are not performing the regulatory functions adequately. And so I would like to see that immunity from monetary damages revoked, with the recognition of what they are. They are just other businesses that are furthering their own short-term commercial interests.
These same exchanges that you refer to, Carson, have talked about people like you in not complimentary terms. They've described, I think it was Tom Farley, the president of the New York Stock Exchange, described short selling as kind of icky. If I understand you correctly, you're drawing. Are you saying that by turning the other way, describing short selling as icky and not pursuing evidence of fraud with the regulatory powers they have, they themselves are parties, if you will, to a fraudulent act? Aiding and abetting, if you will?
Absolutely. So let's look at the first wave of Chinese fraud that hit the U.S. I mean, literally billions and billions and billions of dollars stolen from U.S. investors. And I think maybe only one Chinese company chairman ever went to jail in the U.S., and he was probably, frankly, just unlucky. So you have that situation, and the exchanges did really nothing there other than open offices in China to try to attract listings. They clipped their tickets on this. I mean, the listing fee CIFS has paid is about $125,000. And then, yeah, Tom Farley gets out there and says short selling is icky and un-American. Well, I want to ask Mr. Farley how much of his bonus is determined by acting in America's best interest. Because when I see exchanges open the doors wide, once again, to total scams like CIFS, I think that's un-American. And when you look at another Chinese RTO that has gotten in trouble in China for the kindergarten that they run being possibly a child prostitution hub, well, that's pretty icky too, as well as un-American. So, yeah, I think the exchanges really need to be examined a lot more closely than they have been. And I think when you hear the president of NYSE or the head of NASDAQ throwing those stones, they need to remember that they live inside glass houses.